Hey, before we dive in, make sure to hit that like button and subscribe, because what you're about to hear, well, it might just change the way you see money forever. Money, it feels simple, right? Paper in your pocket, numbers in your bank account, maybe a few coins jingling in a jar. But behind that familiar comfort, there's a world most of us never see. A shadowy world where decisions that feel abstract, printed money, interest rates, bond markets, can shape the very fabric of our lives. And at the center of this world are the central banks. We like to think of central banks as benevolent guardians. They stabilize the economy, keep inflation in check, make sure our savings don't vanish into thin air. On the surface, that's true. But peel back the curtain and you start to see a very different story. A story of power, of influence, of systems that prioritize the survival of banks over the people. The story of a few institutions that control the lifeblood of modern society, money itself. Take the Federal Reserve in the United States. Most Americans know it by name, but few understand what it really does. It can create money out of nothing. Literally. Press a button and billions can appear in the financial system overnight. That sounds miraculous, but here's the catch. That power is not neutral. It's a tool. And like all tools, it can be used for good or for control. Think about the 2008 financial crisis. Banks made reckless bets, mortgages went bad, millions lost their homes. But the Fed, they stepped in, not to rescue the people, but to rescue the banks. They poured trillions into the system, stabilizing the institutions that caused the crisis in the first place. Ordinary citizens left to pick up the pieces. That moment exposed something many people still refuse to see. The system isn't designed to protect you. It's designed to protect the banks. And it's not just emergencies. Even in normal times, central banks quietly pull strings in ways that shape our daily lives. Interest rates are one of the most obvious levers. Lower rates make borrowing cheap, encouraging spending, but they also inflate asset prices, benefiting the wealthy. Higher rates slow inflation, but they make mortgages, loans, and everyday purchases more expensive for regular people. The choices of a handful of economists in Washington, London, or Sydney can ripple through millions of households, often without anyone realizing it. Then there's quantitative easing, a term so dry, so academic-sounding that most people glaze over. But behind that jargon is a real-life magic trick, creating money to buy government bonds or corporate debt. Sounds harmless until you realize the result is often a massive transfer of wealth from everyday savers to those who own assets, stocks, bonds, real estate. The invisible hand of central banking is not invisible at all. It just points upward, toward those already at the top. And this is where it gets darker, because the central bank's actions are often justified under the banner of stability. They warn of recessions, inflation, or deflation, painting scenarios so scary that questioning their moves feels reckless. But consider this: who truly benefits from this stability? The average family struggling to pay bills, or the institutions with the power to borrow billions at a moment's notice? History gives us a chilling perspective. The Weimar Republic in Germany, the hyperinflation of the 1920s. People watched their life savings evaporate, their wages becoming worthless by the hour. Central banks printed more money to keep governments afloat, and society collapsed under the weight of the system. More recently, look at Zimbabwe, Venezuela, or even periods in the US when inflation spiked unexpectedly. The common thread: central banks wielding immense power sometimes stumble, or worse, deliberately maneuver, in ways that can destroy the financial security of ordinary people. But here's the unsettling part. Central banks operate mostly in the shadows. They are accountable to governments, yes, but their decisions are technical, opaque, and often insulated from the kind of scrutiny a CEO or politician faces. They hold secret meetings. They talk to other central banks behind closed doors. The world we see on the surface, markets, interest rates, economic reports, is carefully curated. The truth: there's a hidden world where money is moved, manipulated, and leveraged in ways that the average person will never fully understand. And maybe the most troubling question of all is this: if central banks can print money, control interest rates, and influence every financial system in the world, what happens when that power is used not for stability but for control? History suggests that power, when unchecked, rarely remains neutral. It accumulates, it concentrates, And those at the top begin to see money itself as a tool to shape society, not just the economy. It's tempting to dismiss this as conspiracy or paranoia, but consider the evidence. Cycles of bailouts, inflation spikes, economic inequality widening even as GDP grows, and a financial elite that seems increasingly untouchable. Central banks aren't inherently evil. They're human institutions, filled with human ambition. But their impact is enormous and often invisible to the very people whose lives they shape. We live in a world where trust in money is assumed. We swipe cards, transfer funds, and accept statements without questioning the invisible hands guiding those numbers. But the truth is that money is not just money, it's power. And central banks, they sit at the center of that power, quietly deciding who wins, who loses, and who gets left behind. The question isn't just how central banks work. It's why they work the way they do and who they're really working for. Because the story of money is also the story of control. And sometimes the people in control of money are the people who don't want you to notice. So how do they do it? How do central banks keep this power so quietly concentrated while the rest of us live in blissful ignorance? One tool is control of information. Central banks release reports, minutes, and forecasts, but these are layered in technical jargon, full of numbers that feel intimidating. Most people just glance at the headlines. Inflation steady or market stable? Rarely do we dig into how those statements hide decisions that affect mortgages, savings, and even jobs. It's a controlled narrative designed to reassure, to maintain trust in a system that is fundamentally engineered to favor a select few. Another tool is timing. Decisions are made in the dead of night, during global crises, or in moments when the public's attention is elsewhere. Interest rate changes, quantitative easing, even emergency funding for banks often happens faster than public understanding. By the time people realize what has happened, the consequences, good or bad, are already baked into the economy. And let's talk about leverage. Central banks don't just influence the flow of money, they leverage it to control behavior. Governments, corporations, and even other banks respond to their signals. A subtle nudge in interest rates can encourage governments to borrow more, push corporations to invest differently, or force households to tighten belts. The economy becomes a puppet, and central banks pull the strings. But maybe the darkest aspect is how crises are used. Recessions, financial shocks, even pandemics. These events are portrayed as random disasters, but they are also opportunities. Opportunities to restructure debt, bail out institutions, and introduce new financial tools that might have been politically impossible in calmer times. And who benefits? Almost always those already entrenched in the financial system. The rest of us, we're left scrambling to adjust, often unaware that the rules have shifted. Take the post-2008 era as an example. Trillions of dollars flooded banks. Stock markets rebounded. Real estate prices climbed. But wage growth stagnated, social mobility slowed, and everyday people saw their economic security erode. Meanwhile, the financial elite walked away stronger than ever. That wasn't an accident. That was the system operating exactly as designed. And what about the invisible long-term consequences? Inflation is one. When central banks inject vast sums of money into the economy, they devalue the currency. Your dollar, pound, or Aussie dollar buys less over time. Savings that once promised security slowly lose power. And while inflation is often framed as a technical measure, a percentage here or there, it's actually a quiet redistribution of wealth from the many to the few. Debt is another. Governments, prodded or guided by central banks, borrow endlessly, piling debt on future generations. Every bond, every loan, every policy decision subtly shifts wealth and power toward the financial institutions that understand and manipulate the system best. Ordinary citizens inherit the cost, often without realizing it. Even crises that seem purely economic are entangled with politics. Central banks are independent, but not isolated. They influence elections indirectly, shape public opinion, and steer policy debates. Their reach isn't just fiscal, it's cultural and social. They affect how we perceive value, success, and security. They frame the conversation about money itself, and if we're not careful, we accept their framing without question. But here's the uncomfortable truth: we depend on them. The economy runs on trust, and central banks are the ultimate arbiters of that trust. Without them, the system could collapse. Banks might fail, currencies might crash, and economies could spiral into chaos. Yet that dependence is exactly what makes their power so dangerous. It's a paradox. We need them, and we are vulnerable to them. So what can we do? Awareness is the first step. Understanding that money is not neutral, that interest rates and quantitative easing affect real lives, and that central banks operate in a web of power that's bigger than any single government. Education and vigilance are crucial, because the moment we stop questioning how money is managed, the system works against us, not for us. It's not hopeless. History shows that transparency, public engagement, and checks on power can make a difference. Other nations have experimented with reforms, public oversight, and alternative monetary systems. The lesson is clear. The dark side of central banking isn't inevitable. It's a product of secrecy, complexity, and concentration of power. And those are things we can challenge. At the end of the day, money is more than a tool of convenience. It's a mechanism of control, influence, and sometimes exploitation. Central banks sit at the heart of that mechanism, wielding power quietly, effectively, and often invisibly. The question isn't whether they are powerful. They are. The question is whether that power is used responsibly and whether the rest of us are awake enough to notice. So next time you swipe your card, check your savings, or hear about an interest rate change, remember, there's a hidden world behind that number. A world where a handful of people can reshape economies, alter wealth distribution, and even decide the fate of nations. That's the dark side of central banks. And the more we understand it, the less control it has over us. If this video opened your eyes, hit like, subscribe, and share it with someone who needs to see this. Because knowledge is the only way we can start to reclaim control over a system designed to operate without us. Stay curious, stay aware, and never take the world of money at face value.